Okay, hey Dad, I just wanted to show you something real quick. So this is the S&P 500. There's the 2009 lows, and you see, boom, it touches right here on this line, touches up right here. So this is the primary bull uptrend. This was just a pullback in a ongoing bull market. Right here, the trend line broke, and now what's happened? Went all the way down, and now we're back testing that trend line. Well, we haven't exactly gotten there yet, but we are very close. And today, the reason why I'm saying this is because today was the first day that that's been like rather red. We haven't had a day like this, and it wasn't like a significantly red day by any means, but we haven't had like a red day in a very long time. And the thing about red days, or whenever the market goes down, the volatility increases, right? So whenever the volatility increases, that means that the amount that commodities and stocks move intraday increases a lot. Okay, and so I do believe that either this is the top, or maybe the market, wants to trap and frustrate people, and maybe there'll be some good trade war news that comes out, and it jumps up here or something, and actually touches this yellow line for the perfect back test, and then comes down. I don't know, but regardless, what I'm saying is that there's going to be much more volatility in the coming coming weeks. Um, and you can see, as it was right here, you see how high this is, and now it's lower here and lower there while the market was going up, which shows the huge negative divergence that there was. So in the coming days, there will be a lot more volatility, or even in the coming weeks, there should be a lot more volatility. And so that's super good for me with trading crude oil. So today, like most of the time, whenever I was learning to trade crude oil, I was learning to trade back here on these days. This is the 7th right here on this day. Right here is like the 7th of January. Sorry, 7th of January, stuff like that. That's whenever I was learning to trade crude. Whenever the market was just slowly but steadily going up, right? And whenever it's doing that, the volatility is very low. So I was learning to make those 20 points per day during that time by making, or not by making, but by, well, kind of like creating specific technical indicators that when hit on crude oil on a few like on a 1 minute chart, a 3 minute chart, a 5 minute chart, a 15 minute chart, and a 1 hour chart, all when combined, uh, show that like there was going to be a trend change or something like that. Okay, and so what I mean by that, like, and the reason why I want to do this, because I wanted to show you how it is that I've been doing what I do, and like how it is that or what was different about today, while I was able to make the 2000 like relatively easily rather than just the 200. um so let me go right here. So this is the primary screen that I watch during the day. Uh, so this is a 1 minute chart right here. This is a 3 minute chart, and this is a 5 minute chart. So if I zoom in, zoom in, okay, and I'm actually just going to show you, is that it? Yeah, this chart first. That way it's just a little bit easier to see, 'cause I know there's a lot of stuff going on the other chart that I'm just used to seeing that you're not. I saw, like, I woke up this morning like 5:30 or so, and I saw that I connected, this line. I made this line here, boom, connected there, bounced off here. So whenever you have three bounces off, basically like off a line, then that confirms the validity of it. Okay, boom, bounced here, but I saw that it was kind of weak. It hit it here, and then it hit it again. So okay, if it goes through that area, I'm gonna short. And so that was whenever I made the $700 or whatever it was that I was up this morning whenever I sent you that picture. That was my first short, was right there off of that move. Um, and so I want you to keep this trend line right here in mind, and then also this trend line. Let me just take this trend line off. I put this in on later in the day, and as you see, but well, just as just a good example, see how the trend line, especially early in the day, they're very valid. Late in the day, like right here, especially at the very end of the day, there's a lot of money flowing in and out of the market, so they can kind of be sliced through a bit. But you see what it did. It pushed up through it, came down here, bounced off of it, and then bounced again. That served as once it got over, it served as a very good place to be long, right? even though it is going down, you're long off of that line each time. Okay, so I digressing. So whenever, okay, I shorted this right here this morning, and then I was sending you that text whenever this happened. I missed it. So like, there's this down trend line right here, came up, boom, and so remember, this is just a 1 minute chart. Came up, hit this line, and I mean, almost hit it, nearly perfectly, and um, so then it fell like all the way back down. So how much is this move right there by itself? And that move is from 56.87 to 57.11. So over 20 points, like 23, 24 points, is what just that one minute candle is. But it was in kind of like both directions, like right off the bat, super fast. You can't trade that, right? But what you can trade is this short right here. So I shorted the market like right here on this bounce back to the trend line, and I had a stop right here. If it went through there, then I was out of the trade, but I would only lost like $30. So I took the short there, came back down, and I flattened somewhere down here. I mean, I made a good penny on that because that wasn't. If I had held through the whole thing, that'd have been about a 25-point move. I think I just locked in like maybe like $100 or something. I'm not sure because oh yeah, that is the other thing, is that I am. I made the $2,000, but I took 86 to 85 I'm sorry, 86 trades today, and so 86 trades is approximately $600 in fees throughout the day. So I actually made $1,500. But that also shows that because I was making the 85 different trades, it proves like the indicators, the technical indicators that I developed over that month and a half or so are extremely important, and they are valid indicators. And just by looking at this chart, something easy to see. So like I have this chart up along with that other chart that you saw a second ago. In order to kind of simplify things, I do the trend lines on this chart right here, and I do also a lot of times the divergences. See the divergence, boom, and it bounced out of there. Look at this divergence, boom, to there, and while that was going higher, I shorted this right here because see that line was this, and so this is like where the stock market is. You remember how it was in that bull market for all that time? Like, okay, this is on a very a shorter time frame than the stock market, but it's the same premise, is that it's in this uptrend for all this time. It breaks, bounces, and then when it comes back up, it back tests it, and then that's the best time right there that you can go short. And so I did go short there, and so a move like this in the future, instead of making so many trades in one day, a move like this, I should have just hung on to it and rode it down to the bottom. And I'll show you why in a bit, why I knew that it was going to go much lower than what I ended up taking the profit at. Because I think I took like maybe $150 on that trade, whereas I could have waited and made about $350 if I would have just held through the move, right? So just showing you, but so you can just kind of see these type of things. See this right here, divergent, divergent, and so that was a good short off the backside of that trend line. This is an amazing short right here off of both of these, and then this right here was a good buy. See how it was going lower while this is going higher, and basically it's confirmed by two different indicators. Whenever I get stuff confirmed by two different indicators, such as this too, I didn't even see this one up here with this major. See, like while this is going up, those are going down, boom, and that was a very good short right there as well. So I shorted. I think I also shorted this, and I'll show you another chart. So okay, it's just showing you the 1 minute chart and how much it moves. So like this move right here by itself, say you saw it break past this trend line, or you had a buy order like right up here on this side. So if it broke past the trend line, you would have gotten filled on the order. So just this 1 minute candle from right here, halfway through that candle, is from 57.04 to 57.18. So that's $140 or something. And then like this move right here, whenever I took this short, I ended up taking profit right here. But say if I would have held through the entirety of the move, from 57, I think I got in at 57.15. So 57.15 down here, like towards the bottom somewhere. It's 56.71. So that's what, 30 plus 15, so 45 points. That's 400. This is a $450 move, and from 10.15 to 10.45, and and then this was the same thing, but basically not. Maybe this is about $300. This is about $300 in that direction. 150 down, and this is a 1-minute candles. I make sure I said that. 150 down, another 100 up or so, and then that was what I locked in that profit on, and that was about 150, I think. Okay, so that just goes to show how much it can move intraday whenever the market is going down, and I do think that the market will continue to go down. So if you're like too busy to watch the rest of this, you can turn it off now. But like that was just the major point was that there will be a lot more of this type of up and down volatility that you're able to rack up much more than the 20 points. Because some days, getting a 20-point move on those low volatility days, I mean, it happens. I mean, it happens every single day. It moves 1,000 points a day on those. I'm sorry, 100 points per day on those low volatility days. But it doesn't just move up and down so much, and there's just so much room here to make a lot of money. That's the main point, and that should like while the market's up there at its peak. I mean, I do imagine that the next steps are going to be down, and whenever those do start happening, like it did today, there will be a lot of volatility and a lot of money to make. Okay, so now just to show you how I do it with this other chart. It's like, how I showed you that. So this is a 1-minute chart, 3-minute chart, 5-minute chart. So you remember how I showed you in that other chart, that down trend line? Well, it's kind of hard to see my trend lines on these graphs because I just have so many other indicators, right? And so for all of these, like, see how I have like this green, yellow, blue, red? Okay, these are all different moving averages. Like for each of these charts, they're different moving averages that I have learned are very effective on a given time frame. Though I had them set up in the same way, so they're just like set in the same order in regards to where they are. But they're all different indicators that I found extremely important on different time frames. And so say like for this morning, whenever I saw that it bounced up there back up to this little trend line here, where was it also at? It was at this green moving average, which is the 50-day moving average on this chart. And then here, it had bounced up right up to this blue trend line on this chart. It had bounced up right up, boom, right to the orange. So with all three of those checked, boom, that's a short op. Not even counting the fact that it was also at a trend line, right? So short there. And then it comes back up. Where are we? So it comes back up and it hits these moving averages, which are all very important. The red and the yellow are very good shorting ops, and you see it happens here, but also what did that co-align with? That co-align with that other trend line that I showed you. Remember right here. See how this goes straight across right there? Well, that's in. And this is even a better sign for a shorting op right here is that if it hits the 200-day moving average, which is this red line on this 5-minute chart, in a bullish or bearish scenario, it's an amazing short op. And so short there because of that reason, short because of that reason, and then and this reason, of course. So using all that in conjunction, that was a great shorting op. Right here, I saw that the primary trend is down, right? So what I've done for this 5-minute chart is, it's kind of bunched together. So what I've done for this 5-minute chart is, see how the candles look different? All green, all red, all red, all green, okay? And so sometimes there's a few little, sometimes there's like a false candle inside of those. And so basically it's the way that I programmed it so that the candles signify the direction of the trend in regards to both the volume, like if people are buying or selling more or less, and also the general trend itself. So this helps me like on the 1-minute charts, like to know which way is it going. So like right here, it's obviously going down. So I might not find a good entry point right here on this 5-minute chart, but on my 3 minute and 1 minute I will. So when was the great entry point? The great entry point was right here. Number one, that's resistant on this 5 minute chart. But if I come over here and look, the same location on the 1 minute chart is this, right at my red 200-day moving average. So I shorted there at 57.07. And it's like what I'll do a lot of time is like I'll just have an order placed uh, like well before it even gets there. And so if it happens to get there, like I'll be doing work on my desk, and then so if the market just happens to get there, then it's an amazing short op. And so that's what happened with this one. I just had an order sitting here at 57.07. I heard it hit, and so basically got in 57.07, and I wrote it down for like $100 or something. But that move, 57.07 to here to the very bottom of that candle is actually what is that, 97. So yeah, over 20 points again right there for that one as well. And so like that's, and this is super fast. This occurred from 9:15 to 9:23. That entire move right there did. And so just showing you that on these smaller time frames. Another reason why I knew to go short right here on this position earlier. Like remember how earlier I said is backside of these trend lines, and with this divergence that I pointed out, well, it's at the 200-day moving average. It's at the 200-day moving average. I mean, and that was an amazing short. And what you can also see here is that on my volume zone oscillator, which I have not found that there's no one else that uses it besides me, I'm pretty sure. But I found it works extremely well for trading crude oil. The volume zone oscillator is this right here. So a lot of times when you get these oversold readings, especially in high volatility markets, you can basically just catch like 40 points, like $40 super quickly. But another way they're effective is looking at these divergences. So well, so if I come right here to this, okay, so it goes up and hits that, so that's a good reason for it to be a short op, right? But if you look at this right here, see at this point how it was at this first green line, but then it goes up here and hits this. So this is a very good shorting opportunity in a bearish trend because it's like completely overbought, right? Well, what was the next candle though? The next candle was actually a higher one, a higher candle, but it was lower on this volume wise, which was the candle that I ended up shorting on. So like that's something super small, but you can see what that, I mean, that played out. This little move right here played out for 15 down here to, so like another $175 or so, $150. And then looking at it from here to here, which is still the back side of these trend lines, you have this even more major divergence, right? And you can see it here on the 3-minute chart, see it in a lot of locations, okay? And so also see how it got so high right here all of a sudden off. Okay, the market fell a lot, all of a sudden it bounced back. And so whenever a market swings too far, just like on the yearly and daily time frames, like I've talked about with SPY, it's the same thing with crude oil and other things on intraday time frames. It swings way too far in the wrong direction, and then what's it do in the other direction? It swings way too far, gets way overbought, and I took that short right there because I mean, it was at these resistances. It was very high here. And if you look at this MACD indicator on all these other charts, they're still pointing down. They're below the 0 line. So I took that short right there. Where is this at exactly? That chart right there. Yeah, so if you zoom in, you can see exactly, boom, right there where it was. And on this chart, it was right here at that level. So yeah, another like right there on the orange. So boom. So say you short right here, 56.93 to the bottom, 56.72. That's $200 in a couple minutes. So that just goes to show you how many opportunities there are right now, especially with this volatility and all the different things that I'm looking at in order to make these trades. Like I missed this trade earlier because I was trying to record this video. And I messed up. I didn't hit record, or I hit stream for some reason. I can't get it to save. Anyway, this move right here, see how he got up over the trend line, it pressed up, hit this red here, hit the red here. I mean, this right here was an amazing shorting opportunity that I missed. But if you shorted it right there, 57.03, and you hung on to it, I mean, as of now, it's down here to 56.78, so that's 300 and something dollars right there just from that one move in the aftermarket hours. And then here, like in the pre-market hours, if you see this, I mean, you see how far how far it moved from 57.61 to here, which is about 80 points or so. I mean, that's a huge move. But so yeah, just want to show you that with those. And then if I go over here, I can just another thing is that I also look at the 1 hour and the 15-minute charts, and I've made these like these moving averages just like the other charts very specifically for certain reasons. And you can see whenever it gets down here, this yellow, boom, it bounces off almost perfectly because the way I set it up. That was another thing this morning that I knew I should short right here because I saw it broke below this orange trend line. And on the 15-minute chart, it broke below the green trend line. Okay, another reason why I knew then to get back in short later in the day. And so like I have all these up on different monitors, like so like I don't have to swap in and out like I am to show you this, but I'm able to see all this simultaneously, like where the price is. And so whenever I saw it come back up, testing that trend line, guess what? It's also at this orange moving average, which is very important on this 15-minute chart. And the same way with this 1 hour chart, right at it. And it's so amazing short opportunity for that reason. And like I said earlier, that I should have hung on to this one for longer because it had much farther to move down. The reason why I knew that is because number one, that short right here, I mean, that's literally the most perfect short you can have. Number two is that once the 15-minute chart breaks this green moving average, it almost always comes all the way down to the at the very least to these red and yellow moving averages. So that had been a good time to have let it go all the way down because that would have been about a $350 move rather than just locking in the $150, right? So just want to show you that in regards to those charts. In regards to, yeah, I guess I need to show you this. So like whenever you're looking at price is a very weird thing, but or whenever you're looking at the candles on the chart, they actually like don't represent reality perfectly. And so what I've done is that I've got a tick chart, and so a tick chart it basically does do that. It represents reality as it or these ticks or these candles as they should be. And so like right here, you would never be able to spot this channel on a normal chart. Same way for this, I could have made a nearly perfect channel out of this. That stuff never happens on normal charts. And so, but like what I'm saying with this is that, so I have this up on another chart. If I see this, like the previous day, it was going in this trend line, right? And I see that it comes out of here. Well, I would short right here on this down move, but then it comes up, bounces, hits it on the backside. That's a perfect short opportunity, right? Okay, in the same way here. So as it's in this little in this trend channel, if it falls out and it literally goes all the way back up and into the channel like it did here, there's an amazing short that happens at this stage right here whenever it comes out of the channel, because unless it's going to continue to run up, it's going to have to come out of this channel. Basically this is just that pendulum swing. It went too far down and then went way too far back up, and then guess what it's got to do again? It's got to go back down. So whenever it goes back down, where do you short at? You short right here on the back side. So right here, it's kind of risky to short it, right? Because maybe this is the top, but maybe you thought this was the top right here or something, right? But no, instead you short right there. Short there, and so from 57.48 to here, 57.12, that's like $400. It comes back up and it literally does almost perfectly again. Yeah, nearly perfectly again. You take that short right there, and I mean that short, if you would have short there and stay in the trade from 57.61 to just like there, that's $700. So showing you that, and then lastly, where is that chart? I also so like my basically like the one thing I focus on a lot too is like reading these 1 hour charts and reading them without the trend lines or anything else. And what you can see is that, crude oil made this bottom like right back here. And so you can connect this trend line that I expect will eventually be touched again. But currently, see how all these hits the top of all of these, right? Hits the top right here. But it's also, if you draw this line right here, it's getting like crammed inside of there, you can imagine. So what's got to happen is it's going to have to break. And this is called a rising wedge. It's a specific pattern. So it's going to break and it's going to break down. Um, and, so another way that I also would have known that this is going to sell off yesterday, besides it going up into that price channel, which I just showed you on that last chart, was the fact that look at this negative divergence. It was down, goes up, and while this is going up, that's, amazing negative divergence that you should short into. And as well as right here, and you can see where, I mean, whenever I go through these charts or when I watch them during the day, I see all the divergence and, how it plays out. See this divergence, divergence, divergence. There's divergence right here on this chart. And what happened? Ran for 167 points. So, for $1,600 was that move. Now that was over probably a 2-day period if you would have bought it right there. But so you can just see that how it plays out from this longer term time frame to the shorter term time frames, and then how I use those shorter time frames, or I really use the longer term time frames to know the direction of the market. So with the with like these charts, what you can see is that it makes sure to tell you the direction of the market. See how like it has like this little green under it? The entire time this is bullish, right? The entire time it's bullish. So you're looking for a place to buy it until you're not. And so what I mean by that, so like I just showed you that 1 hour chart, it's back at the very top of that channel, right? So now you're looking not to buy it anymore. You're looking to buy it here and here and here, but once it's now up here, no, that's when you're looking to sell it, right? Um, and also another thing is that I had a short position that, I was closing all these positions down here because it wasn't likely for it to break through this trend line today. It'll probably break through it tomorrow, given that it's going to be crammed up, going up and cramming up through there like that. So basically you had a buying opportunity down here the entire day. I knew I could safely buy here, and that if it were to break that trend line, then I would just get out for the $30 or $40 loss or whatever it would have been at that time. And so since you know that entire time right there, it's in this bull market, what can you do? Well, you're over here the 15-minute chart, and I have, like I said, I put these averages on here for certain reasons. It falls down right here to this green line, which would have been an amazing entry. You have this divergence right there to there, there to there, buy there. Same thing here. And so this time on this one right here, it goes through, but look where it headed on this chart. Basically right at those same levels, and that's actually on that uptrend line as well. So I guess I'm just trying to show you that all the reasons, or all the reasons why I do go about buying something or not buying something. And just the last thing, if you can also on this tick chart, you can very easily buy or sell just whenever these things like max out. So like, well, I wouldn't have sold right here actually, even though it did sell off. I wouldn't have sold because there wasn't divergence between these two. But whenever there's just one going up, such as this right here, boom, that's a perfect short. Boom, this right here should be a good short. Yeah, it's good short. See, whenever they get to this overextended range, but the same thing is true to the downside as well. It's like right here, it was like way oversold right there at that point. Boom, you buy it right there, and look what happened. A rally of 55 to, oh geez, that was $900 right there in just one afternoon off of that rally. Short right here at that spot, and so like, sorry, that spot, and so like I'm using all this stuff like on all these other miners beside me to make my decision all on this 1 minute chart as to whether or not I'm gonna buy or sell and what the direction is and that type of thing. So yeah, I was just wanting to let you know that. All right.